1 2 1 2 testing. I will begin the stream when we hit 150 likes today.
all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
One, two, one, two. Good afternoon, everyone.
Good afternoon, Thomas. How you doing?
Good, very good. How are you?
I'm good. I'm just saying I'm sorry I couldn't be able to be on the morning briefing because it's too early for me in my zone. So I'm here now.
It's forgiven, Luis.
Thank you.
Anyway, so the reason why I started the afternoon live session is because I entered into a long position on gold, another one, because I have stacked up some positions since Monday. The markets are very choppy, so I had to move one of the positions into more than break even, and the other, actually this is break even, and the other position is a little bit lower. Yeah, because the markets are choppy. So, but going back to TradingView, where I can do the sketching, you can see that how market is squeezing in this little wedgie. So as we get closer to the end of the wedgie, market most likely is going to be more volatile. And looking at the economic calendar today, there's not much in today. We have durable goods orders in 40 minutes. A quick question, who attended the morning briefing? Not many.
I didn't have chance this week to join at all.
Nah, did you watch the recording, which is uploaded to the website?
And just now I'm having chance to get on the computer. I looked at your analysis. I saw what you have posted for the durable goods this morning. I saw the other analysis. I'm trying to catch up.
Ketchup. I like mayonnaise.
Why not?
If you prefer ketchup, then it's fine. Anyway, so we are getting squeezed in this dirty wedgie. So anything is possible in the market, guys. Volatility is going to increase. What we know about this week's trading session is that the market is divided into two parts, obviously buyers and sellers, but what is driving the gold market and all financial markets this week? Well, we started the daily briefing, the morning briefing, with the usual fundamental analysis. So we start with the market sentiment, as I explained in the morning briefing. I go through the most market moving financial news, whether it's be, the fear around banking crisis. First Republic Bank just posted a disappointing quarterly figure, which I highlighted to every one of you on Monday, that First Republic is going to report a disappointing quarterly report because all the depositors are fleeing the regional banks and the small banks and depositing, transferring their money into the big boys banks. So Morgan Stanley, JP Morgan, all the big investment banks or even bigger banks, Citibank, Barclays. The reason for this is because they have more protection, even though they have the same depositor protection. But it's most likely that those banks aren't going to fail because they are too big to fail. So what does it mean for the markets? Absolutely, the markets are pissing themselves and all the traders and investors, which is actually good for gold. So fear is good for gold because the bigger, the stronger the fear in the market, the higher gold price is gonna go. And right now, what is the two things which is rattling the nerves of traders and investors? So there's going to be a very short afternoon session. It's going
maybe it's the uncertainty. As an investor, I would be if there is uncertainty, is it gonna be a new interest increase or not? That would bother me.
Yeah, it's the fear, right?
Correct.
It's the fear, the banking crisis. Another 2008, you know, nobody wants another 2008. Is my sound okay? Can you hear me?
Yes.
Just okay or loud and clear?
Loud and clear.
Loud and
Correct.
Very good.
It's clear.
1 2 1 2 1 2 1 2 1 1 1. 1 million, 2 million, 3 million.
Hello, Thomas.
Hello, Dennis. Dennis number 1. Is my sound okay? Can you hear me?
Happy to see you, Thomas. Thomas,
Happy to hear
number
you.
one.
No, Dennis number 1. Okay or loud and clear?
Loud and clear.
loud and
Very good.
It's clear.
1 2 1 2 1 2 1 2 1 1. 1 million, 2 million, 3 million.
Hello, Thomas.
Okay. Now the sound should be okay. So, two things which are shaking the markets and, investors pissing themselves. One of them is the banking crisis. No, actually three things, right? So the first one is the banking crisis. The second one is a potential recession. And the third one, well, we have the earnings season. That's also not looking good. What else do we have? What moves the markets? Fed? What about the Fed? Can you tell me something about the Fed? No, you can't. Okay.
I'm in an area with bad reception. I hope you hear me okay.
Yeah, I can hear you, Yoni.
We are waiting for the news because they're going to indicate if the Fed going to raise the interest more or put it on normal deficit like when it is. We are expecting to see what the news going to tell us.
Yeah, it's going to be a data-driven news. So fundamentally speaking, or if you look at the market sentiment, we talked about the banking crisis fear, we talked about the recession fear, we talked about the uncertainty around the Fed monetary policy, because no one really knows what the Fed is going to do, because even the Fed doesn't know whether they're going to continue the interest rate increases throughout 2023 and then what's going to happen next year. But what they said, and this was the forward guidance put towards by Jay Powell, is that they planning to reduce the rate hikes in 2023. Even they started in 22, so they started to ditch the 75 basis points and the 50s, and now just delivering the usual 25s. But they also want to stop with the 25s. So there's one more rate hike coming up. When is the next rate hike coming up, ladies and gentlemen? When is the next interest rate decision in the US? Let me put you out from your misery. It's going to be next week. Yes, and next week is May. So 1st of May, Labor Day, international holiday all around the former communist countries. But we call it Labor Day back in the Soviet Union. Anyway, so Tuesday, no. Wednesday, yes, there's going to be a Fed interest rate decision. Surprisingly, there won't be any FOMC meeting or FOMC press conference. It will be just a good old interest rate decision. What is expected from the Fed? Are they going to raise or not raise? Interest rate. Raise 25.
Not going to raise.
No, they are expected to raise 25 basis points. 73% of the traders currently pricing in a 25 basis point rate hike next week, Wednesday. So definitely is the prime day of the week. And then on Friday, we are going to have the almighty non-farm payrolls, which is expected to be much lower than the previous number, meaning that less jobs have been put out onto the jobs market. So the possibility that the job market is to suck up all the excess unemployed people, it doesn't sound good, but that's the reality. This is how the market dynamics working. The market is sucking up all the excess supply of labor. And right now there isn't much supply of labor because unemployment is at 53 years low. There's never been so lower unemployment in the United States in the last 50 years as of today. So next week is full of market moving fundamentals and macroeconomics. But let's have a look. What do we have this week in our pocket? So what is it? Today's Wednesday. We are going to have so we're going to have durable goods orders. How is it going to affect the market? We have 30 minutes. We should put together some analysis, shouldn't we?
Yes.
Let's have a look whether... Yeah. How about we put together something together? I'll show you how to do macroeconomic and fundamental analysis. But actually, I did already post my analysis. And I explained it in a morning briefing. What to expect. Right?
Can I jump in?
Where would you like to jump?
It's 8 o'clock.
Do you hear about retrogression of immigrants?
About what was that?
Retrogression.
Retrogression. What does it mean?
It means they stop the immigrant to about the visas for entry of the US, like medical fields.
Okay, so
stop.
all right. So the immigration laws, which were curbed by Mr. Donald Trump since 2018, that was a freeze on entering, immigrants in the U.S. Dennis is saying that actually that is going to change because the demanded jobs, demanded workers, where there is a shortage, for example, nurses, doctors, the usual, all the high value people, the highly skilled, valuable people, that's, usually rich countries are sucking up all the, talents. It's called the brain drain. If you have a trade or an occupation or you studied something which is in shortage in an economy, then the developed countries, they're most likely going to open the gates, but only for the skilled people and the non-colored ones, which is, not very good. But anyway, this is called the brain drain. No, I haven't heard about it, but, why do you bring it up, Dennis?
If there is a movement about the unemployment of the US, maybe tomorrow. Supposed to be tomorrow. I'm going to open that concern to you, but I cannot wait. That's why I asked you to.
Yeah. How long does it take for a change like this, at this scale, to have any effect on the labor market? Is it going to be overnight? Suddenly there's going to be an influx of immigrants and, you know, there's going to be loads of unemployment?
It takes very long. Sometimes
Months,
it takes
years.
like no, even a year. It depends your country.
Mhm.
Like India and China, it takes long time to open again. That's why
Wait to see it.
I'm asking for you if you have
It's gonna
knowledge
take
about
months.
the retrogression.
It's gonna take months, so it won't have any effect immediately on the labor market or the jobs market. It's gonna take months.
Because the immigration is a massive. The US they like to have thousands medical workers. They want more.
Oh,
More
ladies and
demand.
gentlemen, Sam is back. Sam, those who you remember Sam, he caught the attention of many of us a few streams ago when he risked everything on one single trade and he made it big. He made it so freaking big, he came back to that day, the day after, so the next day he came back and he did it again, all in, full margin. Well, it wasn't that lucky the second time, but definitely caught my attention. Sam is saying that 100% sell on gold. Anyone who says buy is just clueless. Well, I just said buy on gold, so it makes me a bit uncomfortable. Oh my god, I don't know what to do. Sam just commented again that unlucky Tomasz, it will be a buy eventually, but not today. There will be first be a liquidity grab at around 1970, so for me selling today, but good luck brother, you're gonna need it today. Alright, Sam, listen to me very carefully please. What are the reasons why you're saying it's a sell? Is it purely technicals? Like you say there will be a liquidity grab at one point?
Probably saw the liquidity grab now in the buy side.
So Sam is saying there's going to be a 1970s area. It is possible, which would be a very dirty move. And then Sam is saying there will be 1970. There is no upper target that Sam gave, but this is what Sam just recommended, or that's his forecast. Wow. So something I don't know where's the higher limit because he didn't give any higher limit. Yeah, it is possible. As we get to the end of the wedge, that's where we're going to see the dirty moves. Now 1970, in my opinion, who knows? But what I'm expecting on gold today is, you know, to play around at the end of the wedgie, and you know who doesn't like a good wedgie. And initially we have very strong support levels. Now I explained the macroeconomics and the fundamentals, and Sam is saying fundamentally it's a buy, but I don't see it happening yet. See it happening tomorrow, GDP event. Okay, so we agree that fundamentally is a buy because we have the fear around the banking crisis, we have the fear around the recession, we have the fear around the Fed. No, the hopes around the Fed pivot, and right now the Fed is in a blackout period, meaning that the Fed, we can take it out from the equation because we don't have to worry about the Fed. The only time we have to worry about the Fed and interest rate increase if we have some very inflationary data, because that's going to push down gold. But right now, the only thing that we have between our Lamborghini and us is the durable goods order due in 23 minutes. So I recommend, instead of just saying there will be a liquidity grab and, you know, all that, let's maybe do a more professional analysis on what could be the two possible outcomes, whether it's a sell or buy on durable goods orders. Well, for your convenience, I already marked up the chart with two potential scenarios, a buy and a sell. You can see right here the durable goods orders. So let's just fine tune the chart. Durable goods orders are to be published today. I'm looking at a month on month. If we have a very low durable goods orders, that's disinflationary for the economy, and it gives the Fed less reason to continue with the interest rate increases. So in that scenario, when the durable goods order is coming out lower than expected, then most likely that price on gold is going to continue to increase and break out from this wedgie. Now you can trade wedges two ways. It can go either up or down, as always in the market. So that will be the scenario with a retest of the upper trend line. And if we have the durable goods orders coming out higher than expected, that is highly inflationary. And, you know, gold doesn't like inflation right now, because the higher the inflation, the higher the interest rates are going to be. So in this scenario, when we have a high durable goods orders, which is inflationary, then gold is going to push down. Now, what happens if we have a no change? How is it going to affect gold?
It don't affect gold on that kind of fundamental. They will have the interest rates. I don't know.
Calvin says that fundamentally we have the end of the month profit taking as well. Okay, so in order to understand financial markets, we have to understand the basic dynamics about how some of the assets are working. And many of the assets are not as straightforward as you buy and then you sell. Some of them work as the same way as the stock market. Some of the ETFs, for example, where you have units. Now, if you want to sell, you have to borrow first before you can sell, because naked selling is illegal in centralized exchanges, for example, in the stock market. And, you know, gold works the same way on the ETFs, because it's exchange traded funds. So when you want to short an ETF, you have to first borrow it. And those who shorted last week, let me just go back to the chart, who went short, for example, at this price level, they had to borrow. So this is the price level. If they wanted to short, they had to borrow. And they were holding the position all the way to 1972. And at the end of the month, you know, when price started going up, they just cashing out here. But in order to log the profits from here, at here, they had to return the stock. In order to have to return the stock, they have to buy it back at a lower price, return it to the original holder, and the difference is going to be their profit. That is how, you know, short selling is working. So unfortunately, not all the time profit taking is going to be downward. Sometimes it pushes up the market, especially on ETFs and stocks. So bad news that, you know, at the end of the month, a sell is a buy, which is confusing for many people, but that's how financial markets work. Okay, what are the other reasons? Again, Martin Q says liquidity grab already occurred from the buy side. Probability of breaking up is high. That's what I'm aiming for, Martin. We talked about the fundamentals. Crystal clear that we have, you know, fear of banking crisis, potential Fed pivot, blackout period, you know, all of the macroeconomics behind. And if you look at the technicals, because my fundamentals, my macroeconomics tell me that this is a clear buy. And then I move down to the technical analysis to look for an entry. And if you have a look on the chart, can you identify the pivot, which is a strong daily pivot? Then we have a strong weekly pivot. We have the end of the wedge. We have a strong support and resistance level. The price just bounced back right back from the middle of this wedgie. So if you cut it in half, this wedgie, guess what? Price just bounced back where the daily pivot and the weekly pivot lies, which is the middle of this consolidation. That means when the price is reverting to the mean, it's called the mean reverting strategy, you can use this as a strong support level, a strong foundation level. That's my game plan for today. Fundamentally, economically, everything is pointing to a buy, but you know, it's the end of the month. It's a shitty, choppy market, I have to agree. And some people say it's a sell. Yeah, it is possible, guys, but for my analysis, macroeconomics and fundamentals, and then the technicals bringing in, everything is just pointing into buy. So, but we'll see. I don't say never, because everything is possible. Nilesh Rana Vlogs is asking, should I sell gold or not? I don't know. Should you sell? Depends on your analysis.
So let me ask you a stupid question. What
If
kind
it's
of
itching,
products are...
go and see a doctor.
What kind of products are on durable goods? It's like cars, for example.
Let's have a look. What kind of goods are in the durable goods orders?
It's not food. It's not a kind of... the durable goods is as a name. The products that last long. And
If you go to the Statistics
prices.
Bureau, they should have a list.
Oh, okay. Yeah.
Oh. There isn't. Where's the durable goods?
It's here, Thomas. I asked ChatGPT. Machinery, computers, and electronic products, electronic equipment, fabricated metal products, primary metals.
Oh, where is
Capital goods, solid and aircraft. No, I asked on ChatGPT.
Ah, okay. Well,
And he sent me five examples.
Tommy says on YouTube, weekly supporter on 1920 need to be retested and will be retested before all-time high. Well, if you say that it has to be retested, then, you know, I have to believe you. But, you know, this is... It's a very thin explanation. So Tommy, if you can hear me, please explain why does it need to be retested? Is it purely technicals? I mean technical is only going to take you not far, to be honest, but you know it has to be retested. Liquidity grab, you know, 1920. That's a bit low.
That's too low now.
Yeah, it's a new low.
Well, the last time it was 1920 doesn't mean that there's still some pending orders ready to buy.
1920 is just way too low. If it goes down to 1920, I guarantee that it's going to crush all the way to, you know, 1900s, 1850. It's too low, 1920. And I think Tommy doesn't incorporated any reasoning or there's no logical reasoning behind it. It's just a number he made up that, you know, it's going to go down to retest and an all-time high. It's the same as when Nomi is shouting in like random numbers that, it's going to go to 2200 and then melt to 1500.
Mm-hmm.
I am a Master LD is asking, what about DXY and its influence on gold? Well, let me tell you something. So DXY, the dollar strength, is driven by one thing, which are the yields. And the yields in the US Treasury bonds and bills, but mostly bonds. So anything above a year maturity, so 2-year, 10-year. And currently the US is phasing out the aggressive monetary tightening cycle because they peaked at 5% in 2022. So you can see that at the beginning of 2022, the Fed started the aggressive monetary tightening. So they pushed up the yield on the bonds for 5%. And that, my friend, is the only thing which drove the dollar strength in the past 1 year. Because the higher the yields on the US bonds, the higher the demand for the dollar. But since the US is phasing out the interest rate increases and monetary tightening, the monetary policy tightening, because they want to phase out the interest rate increase, the demand for dollar is dropping. So you can tell me about liquidity grab and, you know, all the fantastic strategies you learned on Instagram, but this is what drives the market. It's the US monetary policy. That's the only thing currently. Sam is saying, Tomasz, it's okay to admit when you're wrong. Today is a sell. Well, you know, I like to punish myself, Sam. So I have to go with a buy. Unfortunately, you know, I
That
could.
guy, man.
Yeah, but he's right. You know, it's okay to admit when you're wrong. Oh, I love him. You know, I talk about macroeconomics and fundamentals, and you know, all of that I learned at university and in my few years at working at hedge funds and big banks. You know, it's all nonsense. So you know, it's the best thing if you start drawing. You know, use as many indicators as possible. Start drawing trend lines. Don't even worry about the macroeconomics and fundamentals. It's just all gibberish and nonsense. The best thing if you focus on liquidities and you know supply and demand on a chart, not the supply and demand in economics because that's bullshit. Supply and demand on chart, basically just previous highs and low, and you know try to learn some fancy strategies such as ICT or SMC. Trade like the banks, and you should be fine. Absolutely, that's the best advice I can give you.
Thomas,
It's a joke. It's not serious, man.
Thomas is trying to bluff you.
Pardon?
Sam is trying to bluff you.
Oh, I love you too, Dennis. Tommy is disagreed.
Sam trying to bluff you.
Thomas is disagreeing with Sam. There is an imbalance around 2039-ish. Not even a exact number, just ish. So 2039-ish. Could fill the gap and fall from there. Everything's so possible. Absolutely. If there's an imbalance, yeah, it's most likely.
Huge sarcasm.
Absolutely. But you know, the one thing I was sarcastic. So yes, economics just drives the markets. So fundamentals and you know, it's important because many traders who have absolutely some completely different background and education. Maybe he was a baker or a bricklayer or a doctor, doesn't know anything about financial markets. And guess who's trading in financial markets? Banks, speculators. And guess where they studied the financial markets? At university. And you know, this market has been around for centuries. And everything is driven by money. And guess who controls the money? It's the central bank. Central Bank of the US, Bank of Japan, Bank of England, and you know, interest rate drives the markets because interest rates is going to define the money supply. And if the money supply is defined by interest rate, then I guess we should look at the interest rate and which country is offering the highest yields and maybe look into the future. This is a very, you know, sadistic, well, it's a very, how to say, maybe it sounds weird, but maybe we should consider the potential to look into the interest rates in the short and the long term. Maybe, just saying. Oh, Sam made 2,367% on one trade. Wow.
What? 2,000%?
Yeah, over 2,000% on one single trade.
Wow.
So we're going to have durable goods orders in 8 minutes. And because we don't know the number, unfortunately, Sam could be right. And even Tommy could be right. There could be a liquidity grab. There could be anything is possible today, guys.
Hey Thomas, can I ask you something?
Of course.
A quick question. Do you have like a, I don't know, like a list where we can figure out which news are important, you know, for people like me, which are beginners?
Yeah, look at the stars.
Yes,
On
the stars.
if it's free
Yeah,
star, it's very important.
Oh, it's not a joke, right?
It's not
No, No, it gives you an implication about, yeah, maybe this is important. And the most important is, if you go to investing.com or Financial Times, or, if you start reading financial news, the more times some economic indicator is coming up, let me just show you. For example, go to investing.com.
Yeah, that's where.
And if you see that, for example, one of the if they quote that, traders are looking at durable goods orders and NFP, then you can be sure that it's fucking important.
But there's a star ranking, right? They have 3-star ranking, so.
Yeah, but the star rating can be misleading as well, because for example, many times they don't don't give 3 stars to the core month-to-month numbers, but they do for other things, and but anyway, so it could be misleading. Read financial news and read financial news, and when you see in a summary that traders are glued to the screen because of the NFPs coming up, then you will know that NFP is an important number.
Okay, and the economic calendar. I mean, yeah, you have like yeah, in that case, we should watch now the USD news, right? So as example, let's say like today, you already mentioned it, but if I'm new and I'm watching the chart and the economic calendar, I'm trading Euro USD, so I should take care of USD news.
Yeah. So first of all, select the countries you want to focus your attention. Second thing, you can switch on the news. So if you go to TradingView, at the bottom of the chart, you can switch on the news. So if you go to settings, events, economic events and charts, you can just click on, and at the bottom you're going to see these flags, and it will list you the most important news for the day. And today is going to be durable goods orders. Tomorrow is going to be GDP. Friday is going to be Friday. Yeah, it's going to be NFP. Simple as that.
I think you just need to see, like the way I see, for example, the months are all the same, but the weeks are always different. And the fundamentals are already different every week. You need to understand like the bigger ones at the beginning. The bigger NFP, like Thomas said, NFP, SCBI, PCE, like today, GDP tomorrow, and being aware where gonna be that news and what technicals show you every week.
Yeah, what I did is every time Thomas said something about the news, I wrote it down, like GDP, core, durable goods, monetary policy.
Write it down. Everything that Thomas say with CPI, buy and sell, and saying everything.
And all his dirty jokes.
Yeah, I write it too on my book. Yeah.
Well, I trade the same news every single month. So if you stick with me in the analysis section on Discord, you will know which news to look. And I also highlight every week which are the prime days. For example, tomorrow GDP. And Natty Games on YouTube says that I have been trading using technical analysis from the John Murphy book. Not profitable. Was thinking about ICT. What you say for beginner to get profitable? Learn economics, definitely, and how markets move. So don't rely on just the technical strategies, because I guarantee you're going to burn your money in a jiffy. Especially on high impact news, because technical, yes, can be successful, and I look at for entries during high impact news, but you have to have a visual scenario analysis, and you must know the potential outcomes when it comes to news trading. And right now, today we have durable goods orders. I already drafted that what could happen if the goods orders is lower or higher. This is my scenario analysis. You could think otherwise, but this is just based on a few years experience. And you have to trade the news. I think that's the most helpful. There's no 100% winning strategy. Nathy Games is asking, do you trade funded on your own? It's mostly my money, and I also do manage for friends and family. How long did it take you to be profitable? I think it's years, and I'm not joking. But I started off as a desk trader for equities, cash equities, and then fixed income. And then I had a big loss, and then I went back to work for a firm, a hedge fund, and then I started trading my own money again. And then when I understood the essence of risk management and, you know, how real traders trade, prop traders, because I was a prop trader, then I sorted out my risk management and, you know, macro trading, and since that everything is fine. I'm about to buy my Lamborghini next week.
No, you're not. I don't let you.
My wife would kill me if I buy a Lamborghini.
You buy more meat, bro.
Buy Toyota Prius.
Yeah, and I can be a cab driver.
Buy Zastava.
Zastava. Oh, Lada Niva.
Yeah, Lada, the Russian car, Yugoslavian car.
Asian Polska. Did you ever use order flow footprints? Mate, no one has that data. It's just made up. Order flow footprints.
What's up, Patrick?
One minute, ladies and gentlemen, and 27 seconds until the durable goods order. Oh, Sam saying that be prepared for a sell. Well, I'm going to stick to the buys. It can go either ways because we don't know the numbers, but looking at the fear, the macroeconomics, the fundamentals, I'm sticking to a buy. We have 40 seconds, ladies and gentlemen, until the durable goods order. They've run out of coffee. Shit. 20 seconds until durable goods orders. Get your wallet ready. And 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And the durable goods order is now out. What is the durable goods order? Wow, shit, it's inflationary, so we could have some press down on gold. So, ladies and gentlemen, wait for a second. Durable goods order month on month is definitely inflationary, so let's just reduce the positions on the buys, but don't close the full position yet. I'm leaving some runners. I'm going to just close down some because it's inflationary news. Now, the good thing is that sometimes the market is react the opposite way, so don't be worried. I'm still sticking to the buys because the Fed isn't around because they are in a blackout period, ladies and gentlemen. Okay, quickly, let's have a look on durable goods. Kurwa. Okay, durable goods month on month is inflationary because it was expected negative number. Durable goods month on month is fucking inflationary. The leading one. But I'm going to stick to the buy. So the data is inflationary, but I'm expecting price to trick everyone. So not to jump in to any sells. And I'm going to tell you why. Well, I already told you, actually. Suddenly, everyone is so quiet.
Every time you say 9, 8, everybody starts to stress.
Can I find this Spotify?
Now it's better. Nice music.
Yeah, maybe in Spotify somewhere.
Sam, are you selling? Calvin says sell. Sam says, I try to warn you guys. Actually, the data being inflationary could be liquidity grab in itself. Let's bring it on, Sam. You need to get the market sentiment right. Without that, you're going to not succeed in the long run. And the Fed isn't around to do anything, so anyway. Positions are in break even. The maximum I could lose is going to be 1k, but even if I put this into break even, now that looks way much better.
Nice.
So I have absolutely no risk on the plate. Sam got stopped out.
Thomas, the sentiment is 59% short.
But whose market sentiment? Like general traders?
59% short.
Yeah, but they don't speculate on the Fed like I do, because I just explained that even that the data was inflationary, I'm going to stick to the buys. And you know why? Because the Fed isn't around to slap down the market. Because interest rate decision is coming up next week, Wednesday. So who's going to stop gold to go higher? No one really. Sam says, I told you I was right, now bye. Alright, Sam. Stephen Atkinson, I bet you get sick of explaining yourself. Not sure who you writing this. For myself, I don't really need to explain myself, but I like to give a depth for my analysis. I like to explain to logical reasoning behind why am I buying or why am I selling, and it helps, hopefully helps to understand people that how markets work. Anyway, I'm going to lock in some profits on gold. So 2.5. Oh. All the positions are in, you know, move to more than break even, so I should be fine, whatever happens. Sam says, I just blew my account.
Fuck, man.
Oh no, shit, wrong button.
No, God! No, God, please, no! 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 No!
Oh, you're so
But
funny.
do you know
Sam.
that guy, Sam? Or you just hear from...
No, he's a follower on YouTube.
Because I remember 1 year ago you share on Discord a Telegram group, and I still have that Telegram group. Is a chat with a lot of people, and there's a Sam there, and always is the same there. All the same guy. The same
Everyone
guy.
has a Sam.
I remember Angelo. Angelo is there too. That's why I'm saying. Probably the same Sam.
Could be.
Hello?
Once you master market sentiment reading, and once you start formulating macroeconomic strategies, a whole new world is going to open up. Of course, there are more opportunities to make mistakes, because once you get the strategy right, it's like a weird mind game when you have to think with the head of the enemy. But once you get it right, in most of the cases you will get it right once you master it, and a whole new world will open up. Yes, Swami.
Thomas, I'll ask you a stupid question, which is necessary for me. On Monday, you opened a position on 1979, if I'm not wrong, and it rose to 2000, and then it came to 1974, I suppose. I come and see you still have that position. What I want to know here is, how do you manage that amount of calmness in your head? Because I haven't held any of my position crossing 200, 250 pips.
Heavy
I
drinking.
can't wait. The stress level extremely goes high. How
Heavy
do
drinking.
you manage that? How many years did it take you to do that?
Heavy drinking and drugs. As soon as I wake up. As soon as I wake up. I have a whiskey bottle next to my bed.
Like that really blew my mind off. Like, how can this
Mate,
person be that calm and that confident with his analysis? No,
because
that's really a great appreciation from my side.
The worst that can happen today is I'm going to lose £1,000. No, not even £300, sorry. £300, but the break-evens are going to cover that. So the worst case scenario today is I'm going to walk away with £20 of profit. Can you tell me what is the biggest loss you can suffer today?
No, I had a position. The moment you said it's disinflationary, I just skipped out of the position because I was so much in stress. The moment the data came out, I closed all of my position. I had
anyway, long story short, once you know what is the worst that can happen today, if you lose these positions, if you lose these trades, then you weigh up. Is it something that you're going to go bankrupt, or is it something that you can your account can easily survive? Because if I lose £100 or £1,000, doesn't matter, because comparing to my account size is going to be nothing.
Yeah. And Thomas, do you remember the last time I said I blew many accounts, like for 4 to 5 accounts? Yeah. I actually, again, I came to 4% drawdown, and I really sticked on to my analysis. My risk management was really good, and my psychology was really good. I actually made 3% profit now in the past 2 weeks. Now I just have 2 days left, so I have to make another $500.
Go on.
Dollars. Yeah, I have to make another $500.
I have to take a phone call. I will be back. I have a phone call.
Okay.
You need to have your risk too, bro. You have to have your own risk. You need to know your account, your percentage per trade and everything, man. It's not about the fundamentals there. It's another world.
Yeah, exactly. This time what I changed in myself was the risk management. My lot size, my layering, everything was spot on. I could really manage the risk, and I had targets how much I should lose on this particular day or every day. So this time it was kind of good, but the biggest problem I had was I was too conservative.
Yeah, it's too afraid to continue the trade and everything. We all the same, bro. Thomas let the trade run because he doesn't care and let the trade run. We care, and I do care. I understand you, bro. Because the trade made $40 rise and I closed at 10, and I'm mad because of that. All the people are all the same. Just need to know your risk and let the trade run every day, and just let it run. If you have no risk, what can you lose? Yes, nothing.
Bachelor Supreme is saying, no need to manage your risk if you're smiling, blowing your accounts. Well, yeah, no stop loss, no problem, innit?
Gold's still on this range and retesting on 2000 psychologically level price.
Jövök mindjárt, jó? Oh, gold is running in 44 pips of profit, ladies and gentlemen. What a nice trade again. So.
But Sam said you should sell, right?
Yeah, Sam said it's a sell. Mindjárt jövök, jó? Ladies and gentlemen, if you would like to join the Alpha community, but first of all, guys, how useful are the morning briefings?
Very useful.
Very useful, yeah.
Very useful. Do you get value out of this?
Yeah.
Do you understand financial markets and trading better?
Everything game is clear.
Definitely.
The 24 April, that morning briefing was so beautiful. I wasn't there, couldn't be there, but I watched it.
I wasn't there, but it was great.
No, I watched it before after, bro. Why you record it? No, I watched it after, and it was.
I wasn't there, but it was great.
I wasn't there, but it was great, man. That's the truth. You guys did good.
Okay, if you would like to join the morning briefings, guys, I'm posting a link into YouTube. You get a 50% discount. And I talk about macroeconomics, I talk about fundamentals, I talk about my view on financial markets. And I formulate actual logical strategies, not just drawing like, oh, there's a liquidity grab, so it should go up. Yes, I do look at the imbalances and I do look at the technicals, but don't get me wrong, financial markets are called financial markets for a reason because it's moved by financial and economics. Ignoring those, you won't survive too long. So if you want to add something special that you think it was missing from your trading, maybe I can help to bridge the gap. I'm not saying it's the holy grail because nothing is certain in trading. Nothing is 100%. Nothing is holy grail. But if you're looking for something that you never had, if you're looking for first someone to navigate you through in, high impact news, economics, fundamentals, then your place is at the Alpha community. Morning briefings every morning, live trading almost every afternoon, and there's a whole lot of other things. I do share my positions, I do share my analysis, and you get a free coffee as well if you sign up today. Netty gains, if I start from scratch, what is the fastest way to become profitable? Who wants to answer this question? And I have to go for a few minutes.
Just laugh, bro. And no answer.
Who's
Rob
talking
bank.
in the background?
Rob a bank, bro, and say it's Forex money.
Who's talking all the time?
I don't know.
I can answer to this question. If you're really disciplined, you can get in there like in 3 months.
Nah, you can't get the psychology in 3 months, bro. You can't.
But that's what I'm saying. If you're really disciplined, if you start from scratch and you're disciplined.
No.
Who here has been disciplined enough in 3 months to become profitable?
It's not like that. I mean, 3 months, it's too low. If you know how to work with numbers and example like pips and how to work like for yourself with MetaTrader and your charts and everything, yes, 3 months. And fundamentals, 3 months, yes. But if you don't know that, 3 months can't have discipline for that. You need to learn the basic stuff.
Yeah, but I'm asking, we have a few people trading here. I'm asking which one of you has been disciplined enough in 3 months to become profitable.
Yep.
I haven't.
I'm never consistent in discipline, and I've been years for this.
Me either.
I lose a lot and keep losing.
I'm counting about 24 months before it's kind of really looking break even and stable and steady.
Yes, always. People need to understand how many months they will probably stay in break even. and they just need to always watching the market every day and don't quit. I always say that, don't quit watching the market and follow the market.
Yeah, I agree. I think you need at least a year.
Most of the people with good psychology, they remember the 6 months of gold or kind of currency they were doing. They remember, they saw it, they know what kind of new, they know what kind of effect it does. They remember, they have memory. You need time, I think. It's like everything. If you study to go to a doctor, you make 10 years in your studies. You don't go to an hospital removing arts. It's just simple.
Yeah, psychology is a huge part of the trading. This is what I find out. Like when you conquer yourself, you can conquer the trading.
Yep. I mean, struggled so much because of psychology and being myself and just clicking in the button to sell or buy. That's really rough, but people don't understand that because we say that it's just a click, but for us, we have a lot of things to see it.
Why does everything look like it's frozen on the charts? Euro USD stuck. Gold isn't doing anything.
It's just rising low, bro.
Guys, questions to any of you that are with prop firms. Do you know if you are with a live account afterwards, or it's still like a demo account and the prop firm is just hoping that you're gonna fail?
Yeah, dependent on the firm that you're talking about. Most firms do live accounts. Other firms say demo account, but they are doing the trades for you, you know?
No, because from what I heard and find out that a lot of those firms that are offering challenges, even after you pass the challenge, you are like on a demo account. You're not. They never give you a live account, and they're just hoping that you're gonna fail and take your fee for the challenge.
I don't think so.
Not
They make all the money from you when you make money. They get a certain percentage, you know. I mean, when you fail, they only get your fee and nothing else. So,
1 2 1 2. What happened while I was away?
We are talking about funded accounts, which you pass. When you pass, you still have a demo account.
Can you mute Chris Wu?
Yeah, I can actually kick him out.
Because he's running his TV in background.
Chris Wu. Where are you, Chris?
Yeah.
Ah, got you, Chris. Bye bye. So, where are we? Yeah, gold is just moving sideways, but guys, why am I not surprised? Why are we not surprised that gold is moving sideways? Is the durable good orders that something that's going to move the whole freaking market? Maybe or maybe not. But do we have any more important news this week?
Crude oil.
Who said that?
AJ.
AJ, why do you think that crude oil is going to move the gold market?
Nah,
Is the crude oil the most important?
I'm not quite sure.
No. It's GDP this week, brother. GDP is the most important news release data print today, which is going to be tomorrow. It's more important. Today, the crude oil, yeah, it has 3 stars, but don't get fooled by the stars. The most important news this week is going to be definitely the GDP, because it's a growth data. It tells how healthy is the US economy. Is it growing? Is it stagnating? Is it actually contracting? And why is it important, the growth data? It's important because, you know, the US is strong, resilient, growing, unstoppable. The United States of America, that's a problem because the economy in the US is currently fucking overheating, and the Fed is trying to fight inflation and overheating the economy and trying to cool down the economy by raising interest rate. And that, my friend, is going to move the gold market, depending on how strong is the US economy and how hard the Fed has to come at inflation and how hard has to come at to cool down the inflation, the economy, and that is going to move the market. So last entry, ladies and gentlemen, we entered into just during the stream or before the stream, is running in 30 pips. I mean, how many of you would be happy with 30 pips?
Perfect for me.
That was to use pips? Bloomberg?
Not anymore. I used to fucking be on Bloomberg. I was attached to Bloomberg morning till evening, and even after that, when I used to work on the fixed income desk and equities desk, I did subscribe for Bloomberg for 1 or 2 months again when I was trading on my own, but it doesn't add that much value for day traders like myself.
Okay.
You're gonna have a new 4-hour scandal in a couple of minutes.
5 minutes.
Thomas, we were actually speaking while you were away about those prop firms that I read that a lot of them, they never intend to give you a live account. They're just hoping people taking challenges and failing on them. I'm not saying about all prop firms.
Yeah, it's not. There's no prop firm is actually going to link your trading into a live account.
There are some companies that they said after that you're trading on a live account.
Okay.
Just go to the trust ones.
Natty Gains is asking, Tomasz, how much profit you make in a month? 1,000,000%, brother. 1,000,000%. Nothing less, nothing more. Just 1 million.
Enough for drugs and whiskey.
Yeah, to manage the stress.
Every month a Lambo.
Yeah, I mean, those who make, I mean, everyone who does challenges, I know for a fact that 98% will fail. Phase 1, phase 2, or even the funded accounts, so many people blowing them, so the maths, the statistics is on the favor of the prop firms. There's the tiny amount of people who can actually successfully trade in a lot. There's more people who lose than more people who win. The same as in a casino. You go into a casino, you're most likely going to lose your money.
But what is the better way to save up money and have a own account, or
to just learn to trade? Just learn about yourself.
Yeah, but you still can use prop firm, right?
Pardon?
It's still good to use a prop firm if you don't have the money, by the way.
Yeah, it's absolutely, because you can cash out. I'm not saying that many prop firms, you do get a payout. FTMO, MyForex funds, even I had paid accounts or payouts. Many people get very good money, but the fact is that they, even if they have a funded account, they blew it after 1 or 2, maximum 3 months, but that's a really long stretch. There's very few people who can manage to keep a funded account for more than 3 months. And in fact, that if you are a big roller, your account will get closed down the sooner or later by the prop firms if you take out too much money.
Okay. So best thing will be to save up money and then have your own account.
NetAgains is asking or saying, I understand you don't want to reveal your profit person, but I just want to know if put in the effort to become profit per table, how much can I expect per month? Very good answer. I think most of the people have unreasonable expectations in trading because you see the Lamborghinis, you see the girls with the big boobs, you see the private yachts. Reasonable expectation, 10% per month. And I think that's a very, very reasonable expectation. If you go to any hedge fund on Wall Street or London or Hong Kong, they maximum give you an annual return of 10%. They're not going to give you 10% monthly. What they do is they have a benchmark to beat. For example, the S&P 500 is giving an annual 9.67% return by facts if you look it back, or 12%. The hedge funds, all they have to do is to beat the benchmark, which is going to be the S&P. Now, if they can do it, then you add the management fees. But long story short, in a year, if you make 10%, or if you get 10% anywhere, in a real world, that's the average, around 10, maximum 15%. So if you do 10% per month, as a very, very good return. And I think it's reasonable. Sam says 10% a month is complete bollocks. Well, you make 2,000% per one trade, so I can't compete with that, Sam, unfortunately. And gold is running in 40 pips profit, ladies and gentlemen.
Thomas, can you tell me the importance of market sentiment?
Yeah, it drives the market.
No, not like that. Okay, what I thought was, tell me if the logic is right. Market moves on the inverse way of the market sentiment. If the market sentiment is on bullish, it is more likely to go down because 90% of the market players lose the money. So it's quite logical. I felt, is it logical?
I don't know where you get the data from that. You can look at polls and what IB or IC market traders are currently long or short, but can you validate the origin of the data or how accurate is the data? I only trust my market sentiment indicator.
Okay, thank you.
You're not asking what's the market sentiment indicator?
No. I just that thought was in my mind. So if 90% are losing, the market sentiment, if everybody are buying, so they should lose their money, So I was just thinking that was just a stupid thought. Just wanted to clarify.
Well, if you don't want to know my secret market sentiment indicator, then it's fine.
Oh, you have to explain it.
Yeah, secret is just technical. Just fundamentals and news. I know that, and psychology.
Right.
Thomas, give me your sentiment.
My secret market sentiment indicator?
Yes, of course, number 1.
Okay, let me show you the secret market sentiment indicator, ladies and gentlemen. But please do not tell anyone. I'm begging you, do not tell anyone that what is the secret tool, the secret indicator that I'm using to predict market sentiment on a daily basis.
It is the magic ball, isn't it?
It is the morning briefing. The very morning briefing that you can attend every single morning if you join the Alpha FX community. Every single day I talk about market sentiment. I go through Financial Times and Bloomberg and look at the different charts, the option spreads, the forward, the FX forward contracts and the futures contracts and everything. And I read the news. So I've been trading for over a decade now. And I look at the central banks, I look at the central bank communication, I look at the monetary policy, and I narrow it down, I boil it down, I simplify it in a morning briefing, which is less than 30 minutes every single day, and I tell you my view about where the market is heading, because based on the macroeconomics, the fundamentals, and I formulate all of this into a tradable strategy. Then I look at the technicals, look for entries, and I share my full analysis with you on Discord, only for members, of course. That is the secret market sentiment indicator, is myself. And gold is running in 51 pips of profit, ladies and gentlemen, for those who only entered with me at the beginning of the stream.
Wagwan, Jamaica.
Wagwan.
Wagwan, Jamaica.
Da, 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 da.
Very lots. AJ.
Come on, guys. I need you to push the like button on YouTube, please. I mean, I just gave you a profitable trading tip on gold. So if you're watching the stream and if you like the conversation, if you get value out of this, please show me your feedback. Hit the like button, the thumbs up button. Go, go, go. Oh, 62 pips profit on gold, ladies and gentlemen. How nice is that? Are we gonna get 70 pips? Are we gonna get the breakout to the upside as I was expecting, forecasting, hoping? Come on, baby. Are we going to bounce back from that ugly trend line?
It's on the 2000s price. I'm always focused on the psychology levels. I don't know why. It's just important. I don't know.
Kurva is not here today. No, I don't know where is our little Kurva. Big Kurva, not little, sorry.
What's about US30?
It's earnings season, brother. You know I hate to trade stocks during earnings season. It's very choppy. We can have a look until we... nah, please don't make me trade US30.
Don't trade US30.
Why?
Oh, have you seen the trade this morning on Euro USD? Wow. Did you guys enter?
Yeah.
Yeah.
Big profit. Big profit.
I triple my demo money.
Hey, very good. You start on demo, then you upload some money. You know, pennies make pounds, pounds make hundreds. So that was the trade on Euro USD, and it's still running. Look how nice.
How beautiful is that? 2 trades, SL done.
Yeah, when I see it slowing down, I'm closing my trade. I'm going out.
How beautiful is that MetaTrader, Thomas? Should take a picture and put on the wall.
Yeah.
Make a tattoo.
Oh my god.
Yeah, on the back, man.
Thomas, at the moment you are giving us to eat fish, but I want to learn how to catch my own fish.
I give you a rod. to fish every day, but Stoyan, if you attend on morning briefings every day, you will learn how to fish. I guarantee, because there are many successful traders in our group.
True.
I should change the music into. I give you.
And that's it. It's a 4-hour scandals chart. Jeez.
Yep. But even if
Put
on
the
the daily,
yeah,
it
put the
looks
daily.
good. Even
On
on the
gold.
weekly.
Oh my god, yeah, the weekly.
Oh, gold is going to massage the 70 pips soon. DCS is asking, Tomasz, are the morning briefings posted in Discord each day? Yeah, I send a Zoom link. So this is how morning briefings work. And while we're looking at the gold chart, waiting to shoot up. So this is how the morning briefings work. We have a dedicated channel called Zoom Links, and I post the Zoom link there, which everyone can attend who paid member, and then I upload the recording to the website where it says morning briefings. And if you cannot attend at 8:30 Central European Time, you can rewatch it. And I also share a dedicated channel for gold with my macroeconomic view, and also share my entries before the move actually happening. For example, today I shared this trade on Euro USD, and I explained in the morning briefing that tough day behind us, but economics and technicals continue to point into higher Euro USD exchange rate. The ECB continued to be hawkish, hence Euro is continued to be bullish. And I explained why the interest rate differential is coming soon between the Euro USD. And then I shared that I entered into a long position, enter another long position Euro USD, and boom, shortly after we're running in, talking about 60, 70 pips. Currently, Euro USD is actually running in 70 pips profits. So that's what you get in the morning briefings. And alright, ladies and gentlemen, I'm gonna call it today. We made 50 pips on gold. I'm going to lock in some profits, and then I'm going to have an ice cold beer. How about that? And we come back tomorrow 8:30 sharp for the GDP preparation to make the game plan, because we are going to live trade GDP.
Oh, we dropped.
GDP.
Oh my
GDP.
god.
GDP. So anyway, long story short, we made money today, haven't we? So my job is done. You made profit, I made profit, everyone is happy. But the market is going to move sideways from now. So
Thanks, Thomas.
you're very welcome, sir.
Appreciate it, Thomas.
Only
Have a nice
Sam
day.
is not happy.
Yeah. All right. See you later tomorrow morning,
Thank you,
8:30, guys.
Thomas.
Thank
Bye.
you. Thank you.
Bye
Sis.
bye.
Bye. Bye. Bye.
Thomas number one.
Bye-bye,
Dennis
Thomas,
number
bye-bye.
2. Alright, ladies and gentlemen, welcome back. If you would like to get morning briefings, if you would like to get daily analysis from me to see my trades, then you get the opportunity to sign up to the Alpha community, become a lifetime member. There's only 2 membership left. So once it's gone, I will be closing it down until the 2nd week of May. So there will be no joining. No one can join. It will be closed down. So this is your discount. Take it, use it, but don't abuse it. Make sure that you check the link in the chat on YouTube. Posting it right now. So the first 2, whoever's taking these 2 memberships, will be the last for the month. Thank you so much, guys. I hope you made some profit. Well, we made 60 pips on this minuscule grow on gold, but 60 pips any day of the year. Long story short, make the money, take the money. This is the Alpha Facts.